Here's what I'm going to do. I'm going to give you my investment strategy,
Okay.
and I'm going to be as honest as I can be,
Sure.
and you assess it based on your expertise and tell me if
Let's
I'm
hear it.
right or wrong. Okay, so I'll get down to my rec room, big screen TV, with my dab pen and my laptop, and I'll turn on Jim Cramer on CNBC. And when he tells me to buy, I buy, and if he says sell, I sell.
Yeah. You're getting financially whipsawed. So I think I called...
Is that working for me?
No, it's not going to work. So I kind of buried Cramer in the book. I guess I'm not going on CNBC anytime soon for any interviews.
Why would you bury Jim Cramer? I mean, this is a guy with an uninterrupted string of correct calls. Buy...
J.P. Morgan of this generation, Sam Bankman-Fried's FTX.
Listen, the best thing was an interrupted string of terrible calls. But listen, he's had a lot of good calls because he's on both sides of the market. He tells you to buy one thing on Monday and sell it on Wednesday and back, and vice versa. This guy literally is telling you. They actually did a study on this where they put up his recommendations of what he said on Monday and then on Friday, the exact opposite. Like one day he's saying the market's going up, next day it's going down. Buy this, go from this sector to that sector. That's historically, mathematically, scientifically proven to be the worst possible way to invest.
Me? I like to lay out themes you can fall back on all year. Themes that you buy on the down days, like this one where the Dow shed 94 points, S&P tumbled 0.56%, NASDAQ dropped 0.59%. And again, at one point it was down a lot more. But people keep buying these intraday dips. They can't resist. Not a good sign, frankly.
There is a group of 7 tech giants that rule the world of AI, and they're called the Magnificent Seven. However, according to Jim Cramer, one of these companies may be about to fall from grace, and that company is Tesla, the revolutionary EV maker that has consistently shaken the world of electric transportation. But could Jim Cramer be right? Can this be the final days for Tesla? And is it about to fall from grace? And is this latest comment by Cramer just another bearish comment to drag down the EV maker? Let's find out.
I've been telling you to have lots of cash on the sidelines, something I've repeatedly stressed to the investor club, and I'll tell you, the investor club people seem to be responding pretty well to it. You need cash to participate when stocks get put on sale. And if you understand the themes behind them, you won't get shaken out by a bad tape. You'll use it to your advantage. You know what it's like? It's like kind of having a map when you're engulfed in the fog of war. So let me give you my favorites. They're a little different. My first thought is a theme grafted on to an observation. Obviously, given the strength of the Magnificent Seven coming into the year, everyone's going to have an opinion about whether they can keep running. Me? No. I want to cue up the Elmer Bernstein score, put on my best Eli Wallach face, huddle with John Sturgis to figure out which of the 7 is going down early. Which of them is Harry Luck, the character played by Brad Dexter, who gets shot pretty early in the scuffle? I mean, who's to say we need all 7? Only 3 survived the movie. To me, it's looking a little like Tesla will be the first to fall. We have a CEO who's got a little petulant again, talking about needing to control 25% of the company in order to innovate. I guess it's not enough to have 13% be the richest man in the world. Elon, bad look. I know he identifies with Inigo Montoya from The Princess Bride, a.k.a. Mandy Patinkin. But to me, he's about to be taken out by Calavera, Eli Wallach's brilliant bad guy in The Magnificent Seven. Just like in the movie, the 7 were never buddies. Did you know that? First to be shot, Harry Luck thinks that he's down in Mexico not to rescue the villagers, but to find a hoard of gold. Now, just to switch metaphors a little, he's kind of like the Dobbsy figure in Treasure Sierra Madre. Yeah, Bogart. So is Musk, he's kind of like Dobbs and Harry. I mean, really, can you imagine, just humor me, can you imagine Jensen Huang coming on air and saying he needs 5 times his current holdings if he's going to do some super duper generative AI? I mean, can you imagine that? Pure hubris, which is why Tesla might be the first to exit the 7.
Jim Cramer, the host of CNBC's Mad Money, has made a startling prediction for Tesla, one of the 7 tech giants that he calls the Magnificent Seven. He believes that Tesla will be the first to fall from the group due to valuation concerns, CEO Elon Musk's behavior, and competition from other automakers. But is he right, or is he missing something? Today we're going to explore Jim Cramer's prediction for Tesla and the Magnificent Seven, and the arguments for and against it. And we'll also explore why Cramer may be very wrong about Tesla, and why investors need to be very wary of these comments.
People worried about EVs overall, because I think some people feel duped in that, look, I think Tesla was great. I think it's been an incredible story, growth story. I mean, the numbers have been unbelievable year over year, and Elon Musk has really come through. That being said, I feel like some people feel they've been duped. For example, they can't charge in the cold in the same way. They had no idea. There was the guy who tried to drive across country with the Ford and left it there. The world of EVs, replacing of an EV battery is very expensive. And what happens to all those EV batteries? Where do they go? Is the world of EVs, they're pushing EVs on everybody. They would love 100% EVs. Is it too much, too fast, too much of a push? And are some people losing interest?
Yeah, I think maybe it's been too much too soon in terms of broader EV. Now, if you look at Tesla, I think the issue there is that, okay, consumers want a Tesla, maybe not an EV. You still have less than 5% ownership of EVs in the U.S. So let's say instead of 50%, let's say it goes to 25%. That's $1 trillion of market opportunity. So I would say you're starting to see a little more humbleness, especially what we're seeing in Detroit. But this story is going to continue to play on, especially as more consumers get educated. But just like we saw with the Hertz black eye last week, I mean, this is going to be a bumpy road to get there.
The Magnificent Seven are a group of 7 mega-cap tech stocks from companies known for their innovation and leadership in fields like AI, cloud computing, social media, e-commerce, and EVs. So it happens that Cramer named these companies after the 1960 Western film in which a group of 7 gunfighters tried to save a village from bandits. The Magnificent Seven are the 7 tech stocks that have dominated the market in 2023 thanks to their innovation and leadership in AI. And these companies are Apple, Microsoft, Nvidia, Amazon, Meta, Tesla, and Alphabet. However, Cramer now believes that Tesla may be vulnerable when it comes to the 7 in this group, because it faces several challenges that could hurt its stock performance. And he also cited 3 main reasons for his bearish outlook on Tesla stock. First up, valuation. Tesla stock has soared when it comes to its price by 66% in 2023, making it the most valuable automaker in the world, with a market cap of over $600 billion. However, Cramer argued that this valuation is too high, given that Tesla sales and profits are still relatively small compared to other car companies. The Tesla expert said that Tesla stock is trading at a ridiculous 200 times earnings, while the average for the auto industry is 10 times earnings. And he also pointed out that Tesla stock is more volatile than the other Magnificent Seven, as it tends to swing wildly on news and rumors. Hey guys, welcome back to Tesla Tomorrow. Cramer also cited Musk's recent request to increase his voting control of Tesla to 25%, saying that it was a bad look for the company and a sign of pure hubris. And he also said that Musk's demand was unnecessary, as he already owns 13% of Tesla and is the richest man in the world. Cramer described Musk's behavior as petulant and erratic, as he often engages in controversial tweets, lawsuits, and public feuds. And he even added that Musk's antics could alienate investors, regulators, and customers, and also damage Tesla's reputation and brand. But that's not even all. Cramer further warned that Tesla is facing increasing competition from other automakers, both traditional and new, that are ramping up their electric vehicle production and innovation. And he also said that Tesla's rivals are catching up when it comes to tech and design and offering more choices and lower prices to consumers. It's even more interesting that Jim Cramer mentioned Ford, GM, Toyota, Volkswagen, Lucid, Rivian, and NIO as some of the competition that could challenge Tesla's market share and growth. Before we carry on though, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Cramer concluded that Tesla stock could suffer a massive correction in 2024. As the market realizes that it is overvalued, Musk loses his credibility and competition intensifies. And according to the Mad Money host, Tesla could be the first of the Magnificent Seven to exit the group, and that investors should be cautious about buying or holding onto its shares.
But now let's bring in George Tillis, senior markets correspondent here. George, we're talking big tech and the Magnificent Seven. Tesla maybe getting pushed out of it. Stock's down about 11.5% so far this year. What's going on with the troubles here for this company?
Well, I mean, you go back just a couple of quarters, they denoted as a company that gross margins were expected to fall for the remainder of 2023, and they have by about 300 basis points. They're cutting prices to, of course, compete with some of the Chinese EV manufacturers. I think sales in the United States had slowed down just a bit, and that's causing some troubles for Tesla, but they still have the majority market share in North America with 75%. So that's really compelling. I think if you look at the delivery numbers also for Q4, 485,000 units. For 2023, they actually hit their numbers at 1.8 million units delivered. But the challenge is margins have actually fallen as a result because they cut prices. So what they've done in the past few quarters is sacrificed margins to increase volumes. That seems to have been working out. But again, going forward, I think there's some improvement from an earnings standpoint for Tesla. Just going back 2 quarters, just to give you an idea of how cutting prices has hit margins. They were estimated to earn this year $3.95. Now it's down to $3.18. And the stock has reflected that. I think in the last, at least year to date, you can see the stock is down 11%. I think there's some concerns, and I'm going to throw Apple in there too because it's not performing well this year with China. We see some smartphone sales struggles in China. Apple's cutting prices. Tesla also cutting prices. They're facing a lot of competition in China, and I think that's what's been putting pressure on this particular name. Now,
while Jim Cramer has so much to say, we think that his prediction for Tesla could actually be wrong, as there are several market factors that could challenge Tesla's support and continued success and dominance in the market. So here are some of the counter-arguments to Cramer's bearish view. First up, innovation. Tesla is not just a car company, but also a leader in AI, battery technology, solar energy, and space exploration. Tesla's products and services are constantly evolving and improving as it increases its research and development, leverages its data and network effects. Basically, Tesla's innovation gives it a competitive edge and a loyal fan base and creates new opportunities and markets for its future growth. Likewise, Tesla's demand is still growing and it's going strong as it expands its production and delivery capacity and enters new market segments. Tesla's sales and profits have been increasing steadily as it benefits from economies of scale, cost reductions, and operational efficiency. Its customer satisfaction and retention rates are also high as it offers superior quality, performance, and service. Overall, Tesla's brand is so widely recognized and respected, it represents the future of transportation and energy. And of course, Tesla's got Elon Musk. Despite his controversial personality, Musk is a visionary and a genius who's got a track record of achieving ambitious goals and seemingly impossible ones too. It is also believed that Musk's vision and leadership inspire his employees, customers, and fans, and drives Tesla's culture of excellence and innovation. Musk's influence and popularity also give Tesla a lot of free publicity through word of mouth, and it also helps to attract and retain top talent and partners. So before you pay attention to Jim Cramer's prediction for Tesla, it's also important to consider the crucial fundamentals of the car company.
I'll say this, even though gross margins are down about 300 basis points in the past year, that's to be expected, their net income is over 11%, and that's again above their 5-year average of 5% still. So they've gained scalability. It just happens to be that they've sacrificed some near-term profitability to cut prices and increase market share.
Yeah, they're definitely the leader in this space. They have that ability to dig into their margins because they're still, above the OEMs in here, George. Is this going to be a story here in 2024 about demand? Is demand waning because the OEMs in this space, the Fords and GMs, are pulling back on their investment, but they do have the supercharger network. Full self-driving is supposed to come out also.
That's the thing. I mean, all the ancillary technologies, and I suggest also the charging network. I mean, obviously, the other automakers capitulated and are going to be using the charging interface that Tesla provides as a market standard. That's very compelling, I think, for Tesla as additional revenues. I think their solar business, which is a small business, that might have been struggling in the past year, especially with residential solar installations down because of existing home sales not necessarily very robust. But I do think, looking at the values, just the earnings estimates, if the analysts are on board or on consensus, the last 2 quarters look like the low point. So I'm not saying it's, a bounce from here. It certainly could be. But I think demand is going to be waning for all autos. But it doesn't necessarily mean that Tesla can't continue to grab market share while that's happening. So that's just something to think about.
Jim Cramer was once one of the most vocal bulls on Tesla and its CEO Elon Musk. The stock analyst changed his mind from being a skeptic to a believer. after driving his daughter's Tesla and seeing the true potential of electric cars and Tesla. And he praised its innovation, growth, and loyal customer base, and defended the company against critics and short sellers. However, in recent months, Cramer seems to have lost a bit of his enthusiasm for Tesla. He's been more critical of the company's performance, valuation, and prospects, and has advised investors to take profits or avoid the stock altogether. Jim Cramer has also expressed doubts about Tesla's ability to compete in the emerging markets, especially when it comes to China, where local rivals are gaining ground. So, what could have taken Jim Cramer's love from Tesla? Let's consider some possible reasons for his change of heart. 1. Cramer may have been influenced by the negative sentiment of Tesla and the media, as well as the market. Tesla's been under scrutiny for its quality concerns, safety issues, regulatory hurdles, and legal battles. And the company's also faced criticism for its environmental impact, treatment of workers, and controversial social media presence. Cramer himself has also been involved in some of these heated exchanges with Musk on Twitter, where he later accused him of being biased and uninformed. Another reason could be that Cramer may have found other stocks and sectors that he considers more attractive and promising than Tesla. I mean, the analyst has been bullish on the Magnificent Seven stocks, and it has always wanted to diversify the portfolio of Jim Cramer, and recommended other industries like biotech, fintech, and gaming, and even cannabis. And he's shown interest in hydrogen and fuel cell space, which could pose a threat to Tesla's dominance in the energy sector. So maybe this is just an opportunity to do so. Whatever the reason though, it seems like Cramer's love for Tesla is over, at least for now. He's become more of a Tesla bear, or at least a cautious observer, rather than a passionate fan. Whether he will or won't change his mind in the future remains to be seen, but for now, Tesla investors should not expect much more support from the Mad Money host. On the other hand though, Tesla stock could continue to rise in 2024 as the market rewards its innovation, Musk's vision, and demand. Tesla could also remain one of the Magnificent Seven and even outperform its peers, as it maintains its leadership and advantage in the tech industry. What do you think though? Do you think Tesla could continue to be one of the Magnificent Seven? Let us know down below. And if you want to know more about what Tesla's been up to for the last few days, go ahead and click on this next video on your screen. See you there.